one man saying that is fine. If that's your opinion and you're not in it, that's fine. But there is an entire market of millions and millions of people that agree that it is a store of value. So, you can think one thing, but there's also a market, and markets tend to become efficient over time.
We do know that you will always get paid in Hex on a daily basis. And that is truly the miracle that we call Hex, because it is trustless interest, trustless yield. Nothing will stop that contract from running.
He's a cowboy on a steel horse he rides. He's wanted. Axis alive. Welcome in, everybody, to the Creed of Crypto live stream. Broke Boy Crypto here with you, along with Crypto Ewok and our guest for, I don't know, maybe the fourth time or something like that. We're losing count. Axis alive here with us tonight. Welcome him to the show. Hit us up in the chat. We got a lot of you guys pouring in already. Mike Crip, DJ Moonboy, of course, Hex, Ed, Acid Thunder, Crispy Man in the chat already. Shout out to Crispy. Welcome in. Smash the like on your way in. Checks my pulse as well. Support Real DeFi. Support the channel. Support Axis Alive. And welcome in, everybody. We got a bullish one for you tonight and a lot of things to get to. Let's start it off with the guest of honor, Axis. How you feeling about the markets? How you feeling overall tonight, man?
Cheers, buddy. Hey, everybody hit the share button on this stream. It should be a good one. It's time, guys. I think we've crossed the Rubicon on this 2019 style price action on Bitcoin. If you remember not the last time, probably like 3 times ago, it was maybe back in February or March when I was on the Creed of Crypto show. I was talking about how the price action on Bitcoin was looking a lot like the 2019 and 2020 sideways period of pain, and said it would take maybe 6 to 8 months. And here we are, we're breaking out right now. So, hey, I'm happy to be here tonight. I think it should be a pretty jet fueled stream. How are you guys doing?
I think so too. Doing good. Ewok, I'm sure you're feeling good about the markets too. We got BTC almost at 68K. ETH still lagging behind, which we're going to get to here in a moment, but at 2,600. But Ewok, how about yourself? How you doing this evening?
Yeah, I'm feeling good. Definitely seeing the tide shift. It's always a good feeling to see positivity in the markets and attitudes and all that good stuff. So yeah, I'm feeling good.
Yeah, I think we're going to catch a lot of people off guard right now. I think BTC is catching people off guard a little bit right now, kind of a disbelief rally we have going on. Not a lot of people in mainstream crypto paying attention to it. So we're going to get to that. And of course, all things PulseChain coming up as well. Lots to get into. But yeah, Axis, let's just kind of start with where you're seeing the market right now. Yeah, like you just called it 6-8 months ago, whatever it would have been, talking about BTC getting to this point. We are entering October. Obviously, we are, 2-3 weeks away now, under 3 weeks, I think, from the U.S. election, which figures to be a pretty entertaining time. We've got all kinds of little narratives people can assign to what's going to happen in this market. But just simply looking at BTC, I mean, obviously, we'll be even more interested in your thoughts on ETH because ratio-wise, it's still really dog shit against BTC, but it is nice to at least see it rising up as BTC is rising up right now. But
it's hard to even see this BTC at 67K right now. I'm just so used to seeing it in the low 60s or the high 50s. It's good to see. It's refreshing. Yeah. I'm going to start with stablecoin dominance and how it appears as though stablecoin dominance is, it's set up in a bear flag. Similar to what we had back here in 2023. Like, are we going to get another leg lower? And which would imply that we're about to break out, right? Because we're testing this lower support line here on this bear flag. So, if stablecoin dominance drops rapidly, that just implies that crypto just went up hard against the total supply of these 3 major stablecoins. This kind of oscillation occurred back in the last bull market. Between here's 2019 summer and here's 2021 November where it topped. And so this is what you can expect, this kind of price action. You could try to look for little bear flags in here maybe, but that kind of defied gravity. But yeah, so maybe it'll play out the same way. Maybe we'll get some stablecoin printing, but even if you do get stablecoin printing, that upside that you get on this chart from new supply gets deployed. And so then that's it just, those stable coins that are getting minted today are getting made to deploy, and then they'll come back and later after the top is in. So that's the stablecoin dominance index there. I mean, that's pretty much setting up nicely for a rejection and some downside action, which should mean that BTC breaks this descending broadening wedge that we've been in for quite some time. Let's see, what can I say about Ethereum? I mean, Bitcoin's pretty obvious, I think. This has just been a nice consolidation. We've had to deal with like the likes of Gox coins and I don't even remember all the different stuff that we've had to deal with in here. We're just like lots of like U.S. government selling, Germany selling, like just all kinds of inflationary pressures coming in on those coins. And so now that I think that a lot of that's running out, it's time to go. And I noticed, I was talking to the contrarian today a little bit, and he and I both thought that the markets are really just waiting for the election result. But I think this is like, it's become like, if you look at the poly market data, it's kind of really one-sided. And so maybe that's implying that be some, front running. And that's kind of what I feel like is happening now, is some front running here on this weekly chart. How are you guys feeling about Bitcoin? Are we going to break straight out of here? Or do you think we're going to spend a little more time consolidating above it, maybe?
Well, I think I said that on the show last week too, is that kind of people were in a holding pattern, just waiting to see what happens with this election, because it is going to be very critical to see, hopefully, the SEC folks, changing roles, getting rid of some people, cleaning house, really needs to happen either way. But I think, obviously one party more than others, the other will entice that to happen. Trump has even said that he would fire Gary Gensler right away. So, we'll see if that really happens. I hope it does. But I think people are, definitely in a holding pattern. You could be right about the front running, though. As the polls come out, we all know how polls can be, though, very, very misleading sometimes. So, yeah, that's my thoughts.
Speaking of that, and I'm sure you're probably referencing the poly market stuff, Axis, because I saw it's like 60-40 Trump at this point, which is like really hard to believe for me. I mean, it'd be awesome if we did see that kind of a landslide. Obviously, I don't know that that's what we're going to see, but yeah, I don't know. I mean, I think we could pop up above 70 again pretty quickly. Like I said, I mean, it seems like a lot of people are just totally caught off guard right now and have gotten too comfortable with these levels since we've been here for so long that I think I could see us popping off there pretty quick, and then. I'm kind of interested in your thoughts here this whole last quarter. I mean, what do you think we could be seeing with BTC the rest of the year here?
I'm trying to paint the picture here and take you through step by step. Yeah. So let's see. So
happy little candles.
The rule is, like, when you're looking at a price chart, just on a technical, I mean, this is very elementary, guys, but it's important to be reminded of this from time to time, because it can be so simple if you just boil it down to simple higher highs and higher lows. And in defining and characterizing what creates a setup that would be indicative of a reversal. And so that's what I'm trying to do now by just pointing out all these, like, so here we are. So if you just go back to the ETH, or to the BTC ETF period here, we got a new higher high, which is healthy, and then what you look for on the pullback is a higher low, and we got that higher low. It was higher than this wick low here. It was higher than this candle body close here, so that was all good. But it was on the next move up where you have an equal high or a lower high, and I would say that this was actually a double top equal high. Those are totally valid, but we're looking at 3-day candlesticks here. So this would be considered a double top or equal high, and those are equivalent to a lower high. So the lower high is the first sign of weakness, and then that went into a lower low. So when you see that kind of a price action, I mean, it's indicative of a reversal. Then you got another equal high here. It was actually a slightly lower low than the previous, but for all intents and purposes, this is a triple top, and that went into a lower low. And then you went into a lower high. So this is the start of a bear trend here, where you get this lower high here. That's very, very obvious, right? So what do you get here? Triple top, consecutive lower lows, lower high. Okay, now we're in a bear trend. Oh, lower low, good. Bear trend still good. Then you get a lower high. Oh, bear trend's still good. And here's where shit got a little bit different now. Now you hit a higher low relative to this lowest low inside of this trend. So this was the very first pivot point where you could start to see that, hey, Bitcoin price action looks like it could potentially turn around. Now, oftentimes, like people that are still believing in the bear trend, they'll try to go short for the lower high, and that's not what occurred. So then when you get this, you got the lower low into a higher high here. And that's what really basically created this sort of reversal structure. And again, you put in another higher low. Now, if I just show you simply what the pattern was, you got this falling wedge pattern. It's an ugly one, but this is essentially what happened was you had a falling wedge pattern where price was ping-ponging around, and then it broke out, retested that resistance, and now we're just resuming off that. That's all technically bullish. Like this is a very bullish setup on Bitcoin, and it's very obvious that Bitcoin's going higher. From a series of higher highs and higher lows coming out of this kind of chaotic area here. And plus you got the bullish reversal pattern and the falling wedge. So that begs the question, well, then what's your breakout target once this thing finally goes? And you could go, I guess, from the wick low to like maybe like the top here of this structure, and just kind of from the breakout level, where could that go? And that's got you at 88,000. So, and you know, time frame wise, that's a whole other element of analysis that would be required. But just saying that at some point, this setup here is targeting 88,000. And I heard Crypto Sniper today talking about 100,000 plus, which is pretty nice to hear. That you know, someone who's usually, you know, he's basically with the trend now. He's calling for that price target. So, yeah, Bitcoin looks really good here.
You really did paint a good picture there. Yeah, these last 8 weeks or so, you can really see kind of the bullish turnaround. So, yeah, again, I do think just sentiment wise, I think we are going to catch people off guard because people have been kind of really down here for a little while. In terms of the election, there's been this like, you know, Kamala resurgence and stuff the last few weeks. That seems to be kind of cooling off now because she's speaking. But you know, it's interesting just to kind of see this turnaround. Yeah, what do you got for us here? And then I really want to get your thoughts on ETH because, like, again, it just is like so. We've been talking about this all the last few times you've been on. It's struggling. Actually, it's probably at its lowest low since you've been on to talk about it right now, as we sit here right now. So,
yeah, I'll get into ETH in a second, and I'm going to pull up some of the Hexfire data. You know, Crispy, don't shoot the messenger,
right?
So let me don't let me forget that I was going to pull up Hexfire data in relation to ETH, okay? Because I tend to get on a roll and then I'll forget. Okay, so here's the fear and greed index, guys. And we're seeing some greed come in for the first time in a while. And if we look in, maybe we'll go to a 1 year. You can see this structurally is painting a nice rounded bottom. And this is basically trying to measure sentiment off all these different, you know, sources, social media, surveys, dominance, trends. Price plays volatility, market momentum. Price plays the biggest role here, honestly, or it had in the past, and now they've kind of adapted a little bit. But look at this is like, you know, inverse head and shoulders territory. And you can, by the way, you can chart non-price data the same way you can chart price data. That's the beauty of technical analysis, is it's just higher highs and higher lows, and it applies to everything. So, because, you know, everything's got a trend, right? So
sure.
So yeah, look at this is pretty, you know, textbook reversal here that we're getting. And so sentiment's now coming up to test for the first time since July. These levels here, which was heavy resistance back in here, it was support turned to resistance. So if I just draw like a flat line around here, this is very clear. Now you get ahead of that level there, retest, and like, okay, things are going to be looking, sentiment's going to be through the roof. I mean, BTC is putting in $10,000 candles at that point, I think. And then I think the question then remains, like, on a max chart, what is the highest levels we hit last cycle? Well, 2020, we were hitting levels like 92, 93, 95. And right now we're only at like a 65, 73, 65, somewhere in there. So
we got a ways to go.
There's a lot of juice left in the tank is what I'm saying. And like in that first initial period, we just did this. We went up in this channel and we topped out around 88. And then we've just been consolidating. You could see the price kind of in there, right? That whole higher lows and higher highs flipped and reversing now. So, yeah, sentiment's like we're at the key point, right? Where everything's looking pretty nice. And this run up was not too insane that it just took us up here, right? So that's nice too. I always wanted to see us take our time because, blowing off too soon would have really kind of stalled out our ability to get gains in alts. That was one of my fears in the early 2023 was that Bitcoin would just steal all the economic energy out of the space and create a maxi mentality. But it looks like that's not the case now. So.
Well, there is definitely maxi mentality. There's people out there that have that. But yeah, you're so right. Because when we were talking to you earlier in the year, it was everybody was talking about left translated cycle. BTC was so bullish to start the year off. And I'm with you 100%. We've seen it slow down and kind of get that time capitulation for people here over the rest of the year. And now we're right back on track with a 4-year cycle. So really good to see that.
Ewok, what are you thinking about the sentiment right now that you're seeing?
Well, I don't really, I don't often pay attention to the fear and greed. It's weird that we've only ever gotten as high as what's that 90? What is that back there in
1995? I think.
Yeah.
This one here was 83 only back in 2019. This doesn't go back to the 17th cycle where it would have been at like 100.
Right.
Right.
95 is the highest level we've ever painted, and that's probably because we had that rounded top last cycle, right? We didn't get the blow off.
Well, we got the double.
Maybe that's
the double top, right? We got one in April, and then it happened again in September or something like that.
Yeah, I want to see December 2017 on this chart. That'd be interesting to see where people were at then.
And you know what that would do? Because it was such a huge number, it would push all the other data down.
Right.
So then that's what tells me that, maybe, as we approach 100, all the rest of this data goes down, because this really does end up becoming, by the way, don't expect this, because it's dangerous to do it. But if you did get a 2017 style run where institutions are just aping in at 150K, 250K, 350, like stupid numbers, it's not out of the question, I guess is what I'm trying to say. Depends on how much if this is like going to be done in one cycle where the world gets onboarded at once, or does it happen slowly, gradually over time, and the volatility is reduced and you just get a forever buy pressure, like everyone's 401ks becomes like an automatic buy and burn on Bitcoin price or Ethereum price.
Right.
Yeah.
So, but that is something too, though. There's something to that, the ETF thing, and we saw the amounts of money being injected daily. However, the price didn't really reflect it, which started to scare some people, I think, to say, are they really buying? Is it IOUs? Is this over the counter stuff that's not, what's happening with the amount of money that they say is being injected daily as opposed to what the charts are actually really showing.
And I think that was just smart market making, where they were like buying into the weakness and then letting it fall farther and buying into that weakness. But there were certain levels that clearly the market was hungry for, that they couldn't get the lowest prices. And when I say they, it's like the sharks that are accumulating all the Bitcoin.
Sure.
They weren't going to let it go to a certain level. All right, guys, let's look at some ETH action. So
cool.
Yeah, we'll piggyback off Bitcoin. So Bitcoin on a golden ratio multiplier, right? Golden ratio multiplier is just a way to measure relative strength over the cycles. And that's what this purple line is trying to do. Anytime you get, and shout out to Crispy Man for putting this data together. He works tirelessly building data for us. And so, he needs to get the credit where credit is due.
We just had him on like a month ago. Yeah. Yep.
So there's a couple key areas in here. There's obviously these mid-cycle corrections that come in. And then there's these, more importantly, there's the where the blow off happens, which is here and here. When you touch the red line, the 100 level. And this is again, it's just another cycle where you go from the yellow circle into the green circle, yellow circle into the green. Well, we've been in the yellow circle and it's bigger than ever before and badder than ever before. And it looks like it got rejected in the similar area. And by the 70% level, as it did in that first cycle. It's like somewhere between the 2016 cycle and the 2020 cycle. Somewhere between there is where we are now. We're getting rejected, retesting. It's you can't see on your screen because it's probably pixelated, but this is just starting to round out right now. It's really small down in here, but it's just starting to curve and turn back the other way, because you can see how when these things pivot, they pivot pretty quickly. They don't really waste a lot of time here. Mm-hmm. So that's what's happening right now. Is this is about to pivot back the other way, And that's basically sets the trend so that we're going to head up and hit that red line. So if I throw the price chart on here now, maybe it'll help bring it all together for Bitcoin. So here's your mid-cycle like corrective period, and in that first 2016 cycle, it was still gaining in price, but these were pretty nasty drawdowns. Those were those big 35-40% dips that you got on Bitcoin back in the day. You just don't get as much in a bull market anymore, at least in the last cycle. And this was the 2019 style corrective period, which was that deep, giant descending broadening wedge. And I think if you could just pretend like the COVID did not happen, then you would have bottomed out there, and we would have actually glided up in a more regular sort of way. So you wouldn't have had such a steep decline, and you would have just had a normal, like one of these.
Right.
But we didn't get that because there was those anomalies in the market globally. And so then now here we are, and we're getting some sort of a mix. Well, we have like this short sideways corrective period, and now we have another short, 6 months or 8 months corrective period that marks these little tops here. And now we're just getting ready to flip that back the other way. And it's clear that it's getting ready. And the longer that takes on the breakout, as long as the price action is positive, it's healthy and good and fine, and everything's good there. So how can we use this tool to use it for ETH? Well, I wanted to use it from this perspective. So this is still Bitcoin. I want to just show you an idea of where my head is at before we go into ETH. Notice how in 2017 we hit the pink band, and then the cycle after that we were one band lower, so one standard deviation lower on the purple band. So then you could expect like, okay, well, if the last cycle we went one cycle lower than the previous, is it true that this cycle we're going to only hit the salmon colored band or the orange colored band? And where would that potentially be by the time we get there? Because that you can see that when we start trending up, the slope of these lines curves up as well. So you could expect that by the time that we get out there in the middle end of next year, depending on how this goes, like we could be seeing prices up where the purple band is today, but it'll only hit the orange colored band. Right. So what would that look like? Maybe that would look like it's saying here $170,000, but that's remember, that's the orange band in time, based on where this purple band is now and drawn it horizontally. So I'm going to leave you with that for now. Bitcoin to maybe hit 170K. I don't see why that's impossible. And based on this theory that, you're going to just hit one standard deviation lower on these GRM bands. But wouldn't it be cool? Let's go take a look at how Ethereum's doing and try to apply that same logic on Ethereum. So again, the GRM looks a little bit different here. This Bitcoin did not go this low. Remember, in 2019, Ethereum was considered a dog shit coin. It wasn't even an altcoin or a blue chip at that point. It was despised and hated 100 times more than it is today. And so it hit levels here that just you wouldn't, you put the price chart on here. It hit levels here that look, these, unlike Bitcoin, Ethereum way underperformed its GRM bands here, even in the last cycle here. So it's not that it was impossible, because in this next cycle, its high was almost the pink band. So like let's use that logic that Ethereum's going to hit one band lower, and we'll say it hits that purple band, and try to figure out, well, where could that be? Well, then we based on our last example, you just draw that pink line forward, because we'll assume that this is going to take enough months of time that this purple band will reach where the pink band is today. And that would have you at approximately $14,000 per ETH, which that's not that far out of the question, I don't think.
Right.
Yeah.
I think that's one of the prices we speculated. And I remember it in 2019 at $80. I remember ETH at $80. And it didn't sit there long, but I do remember that price point of it.
Right,
it was
here.
Crazy. Yeah.
I remember it too, because I bought it on Coinbase at $81 or $82.
Yeah. I bought a little
bit.
It
was around Christmas, wasn't it?
It was, well, it wasn't long before Hex launched, because the adoption amplifier took ETH. So I remember stacking up a little bit of, I think it was more in November-ish when that happened, if I remember correctly. But yeah, it was, I remember it being at 80, $81, $80, whatever it was. So I got some nice entry at that point too.
So is that what if you were looking at a range axis, is that kind of like where you see ETH this time around? Because I know like the most bearish cases, like since the beginning, people have been talking about like 8K, 10K, which of course would, many people would think is paltry. That's a 2X off of last cycle. But 14 does kind of seem like a sweet spot. Of course, the really bullish scenarios have people calling for 20K, 25K and stuff like that. I mean, I think we can agree that we would all be like really, really happy campers if we saw those levels.
Just remember that those were impossible targets for Bitcoiners and Ethereum guys back in the day. Those kinds of numbers were, so like you're there now. You're just like those guys where it's like, oh, just imagine how, and I remember the Bitcoin parties. Like I was at I remember the sentiment of March of 2018, and altcoins were getting destroyed. But I was at this Bitcoin gathering in Denver, and it was they were electric, man, because these guys had been long-term Bitcoin believers, and everyone got freed from the system basically. And so these guys were just ecstatic. And I just remember, like, it's happened twice now in a row. Now, could it happen again? Possibly. Now, to overperform that $8,000 price target based on GRM is you have to flip that purple line of support as you did here in the previous cycle and ride it up. And right now that number is around 8,200 or something. So basically, I'm sorry, it's at 85.23. So if the ETH chart just went vertical and went to 85.23 and then you just held that as support, well, yeah, you can easily double up to 16K or whatever, to the pink band. Now how long that takes and whatnot, you got to factor that in, the time element and the bullishness of it. I think also at some point, just think about it just from an opportunity perspective. Eventually the gains in Bitcoin have been so good for so long, and it just makes sense to rotate a portion into ETH for some fast money. It just does. So like at some point, the Bitcoin gourd is going to spill off into the ETH cup. And because the opportunity will be so good because the ratio have been just beat up for too long. And, like people, like what do we know about markets? Markets don't sit still. Like somebody's going to do it first, right? We've seen that with every time someone says one of the 4 RH core coins is dead, it's the one that gets the move. As soon as no one's talking about Hex, that one moves. When no one's talking about Ink, that one moves. That's just natural, right? And it makes sense because they're all connected. They're interconnected and they're gonna all go up. So anyway, yeah, I don't see why 18 to 16K is a fair range to trade for much of the cycle once you get really bullish. Yeah, I don't see why that is. There's already such a shortage of ETH on exchanges anyways, and new protocols pop up every day in DeFi that lock up more ETH for yield, and so I just think the opportunity there is pretty good, especially when you factor in like wrapped staked ETH paired with ETH. I mean, that's a hard thing to not want to do. You're taking your ETH and you're pairing it with more ETH with yield inside of it to get yield. So you got a yielding instrument with just regular ETH, bond them together, and you get more yield on top of that. I mean, dude, that's going to become the norm. Anyways, I rest my case. I think ETH's got a bright future.
I think you're dead on. Well, with the money pouring into ETH from BTC too now, I mean, we've been at this ratio for too long. I mean, it's been over 2 months since the August 4th butchering of the markets when we really went down to this level. And I mean, we're at like 0.038 with the ratio right now, which is about as low as it's been. I had this comment. I just wanted to get your take on this because you've talked a lot about like the timing of the cycle, and then maybe after this we can get into the PulseChain stuff. But K Hudson said, "What would you look for in the next 6 months to indicate a longer cycle or same cycle?" I know you've had lots of thoughts on this, but was interested in your perspective here.
Mm-hmm. It'll be much easier for me to tell you because I'm a kind of on the fly guy. Honestly, I get a read of the market as it's happening. But I mean, you could look into like you could take this 1,000 different ways and look into different indicators. And let's see, maybe we look at MACD. Maybe we look at, so you could look at, like, I'll be doing this on my own. I'll be looking at indicators, and Pi cycle top is a good one. Like, so here's an example. By the way, I don't just use one tool. I'm going to use as many tools as I can because like I got the mind space for it. So they used to call it lookintobitcoin.com, but that got changed, I think, to Bitcoin Magazine. And I think you could still do the charts. Well, here's a good one. Fuel multiple. So if Bitcoin goes up at a sort of a slow and steady rate all through next year, and you don't just get a blow off, and that could imply that there's enough demand there to eat up the new dollar inflation. And that's what this chart does. This is called the Fuel multiple. The orange line is showing you the dollar amount of Bitcoin that's being mined every day. So right now, the Fuel multiple is sitting at a 0.74. And like you could see historically that what marked the top was touching this red box up here. So if the Fuel multiple doesn't get up into the red box or tap it, we could be looking at a longer cycle.
Wait, I have a question. Not to interrupt you, but you said this is how much Bitcoin is mined every day?
The dollar value of it. So that's why this dollar line goes up and down.
I gotcha. Okay. All right.
And that's what
they say. That should be pretty static, right? The number.
You see where the halving came in here.
Right. Okay.
So the halvings, they obviously that's where they're the resets that occurs. So then obviously if you're making $1 million a minute in Bitcoin mining, and then the halving happens, it just went to $500,000 a minute.
Right. Okay.
So that was your reset. And so so this, watch for this to grind up slower over time. Maybe that means that there's enough, fiat Ponzi dollars coming in to absorb all that fresh Bitcoin, for longer instead of it just going straight up, and that's the cycle. So that's at least going to be able to measure the amount of externalities or external pressures that's coming in on the Bitcoin price is this Fuel multiple. And it's been in this like long-term like decline. So these highs are getting lower, but you'd think that if any point in Bitcoin history, the demand could beat this deathly line, it would be now where you got Ethereum. I'm sorry, where you got ETF money coming in, right? So keep an eye on that one. And then the other one was the Pi cycle top, which is called the top every time. Like there has not been one instance where this chart did not call the top. And this is why I'm so bullish on this current cycle. So in the very first, in the very first cycle, they crossed here, and then there was a little bit of overperformance when Richard pushed this up here. Richard and Bros pushed the Bitcoin price up to $30, but this did mark the top here. So the very first cycle was a little bit of an anomaly, but after that, this marked the top. I got to be more specific. When the orange crosses the green, the orange is the slow line and green's the fast line. The orange line is the fast line, the 111 daily moving average, and the green line is the 350 DMA times 2. So when there's that cross that occurs where the fast line crosses the slow line to the downside, that marks the top. So it did it here, it did it here. So then within a few months, it was topped here. You had a second top here. In 2017, it called it to the freaking moment, right? He topped there and it was over. And then in the last cycle, it topped here, right where Richard called the break of the parabola, and the Pi cycle top came in. Now you did get a double top there, but what's got me so bullish on this cycle is how we've had time for this to go sideways. So, up in this period here, this was on a pretty steady slope that was probably going to cross by, I don't know, probably right about now would have crossed, and that would have been the end of the cycle because Bitcoin price would have been up here maybe. And so then you would have got that cross. Well, you didn't get that yet. And instead you got lots of time to accumulate the range. And what it did is it tilted that fast line down, actually away from the green line. And the green line is still on a positive slope. So all that does is that gives the airplane more runway. And the longer it goes like this, the better. If it goes straight up, that's bad. You want to see this just be painfully boring to the upside, to 120K, 140K, because that's going to really push out the cycle farther into 2026. So there's a couple of reasons.
And we talked about before, I mean, that would be really the most bullish scenario of all. I mean, the longer this thing goes, the longer we can squeeze out of this, right? I mean,
and then I can, we all like, PulseChain stuff and Hex, and so what would that look like for Hex potentially? Well, I went ahead and I put the Amazon price chart on eHex just for for example, and it looks something like this, where we're coming out of this disastrous lows, triple bear market, right? And you got the top, and then you had the failure to launch PulseChain, and then you had the launch of PulseChain, and then you had the FUD tweet. Like, that's enough bad stuff in a row. Okay, guys, we don't have to have any more bad stuff happening for a while. But if I put this on like a weekly, this is what eHex looks like, right? It's where you don't get regular cycles anymore. It's just demand stays constant because the product is validated, right? Everyone agrees that it's a good product, and then you just get a constant demand. And yeah, maybe we top out on eHex here at 20 cents, but then maybe you break the cycle. I don't know. This is just putting Amazon's fractal on it and trying to put your own feelings on how or why this would play out in this way. Now, I not 100 on all that. I'm just speculating that if you really think about it, this could just do this type of thing where it just goes up and to the right for the next 10 years. And you get plenty of opportunities in here to buy big, deep discounts. Like I think this would be a 87% decline back down to 2 cents. So you could go from 20 to 2 on eHex. That seems like a logical top, right? 20 cents top on eHex comes back to 2.
That drop seems logical too for the next cycle. Yeah, from 99 down to 87. So yeah, a little less volatility.
And then say like, this is where BlackRock decides, oh, Hex is a good asset, we want it, and they start accumulating it, but you just find out here, and then there's a mad dash on them, and then it pushes it up to the 56, 59 cent area, and then there's just some consolidation. Really was all it looks like for a couple of years. I mean, look, this stuff can happen. Just there's the sky's the limit on what's possible after regulatory clarity is in, right? So I think about it for Hex this way, but I also think about it for the whole crypto space, is that we're going to move away from the 4-year cycle, because honestly, painfully slow grind up where Bitcoin just puts in 20% per year on average makes more sense to me than anything. It just makes sense to me because there's an forever buy and burn. If people can buy with their 401k, or the ETFs need to buy forever, like they can make a market at any price. Like this thing could just, that's why I have this chart here, which basically just, if you extrapolate this out, I mean, it's just where these bands are converging. This, this half-assed logarithm, the curve I just drew on here, like this is just gonna, this is a huge range where Bitcoin can just play between 50,000 and 250,000, and it could go all the way out to 2030. And it's just a slow bleed or a slow grind. And so I think the market dynamics are changing, guys. This was the beginning of that, was this crazy, this is where Bitcoin 1 was in 2017. And this was where, users could not get enough money into this space because the exchanges were literally halting signups to their exchanges. And so there was so much backlogged money at this time that as soon as they got the accounts, that money was getting pushed through. We never saw that quite again because the infrastructure is now there to be able to onboard billions. And so it doesn't make sense to get those kinds of cycles so much anymore. But the gains will still be there, but they'll just look flatter but they'll take longer. But they'll still be really good though, especially in altcoins. And you might, if you want these kind of hyperbolic moves, that's where you'd look to PulseChain or Hex or some of these other illiquid DeFi type coins.
What you're saying makes so much sense, and I've been thinking about it for a while too, is like we're just going to see less and less volatility over time because just the maturity of the asset, like as you said, the infrastructure is there now. We're not getting like big players in here and stuff like that. So the gains could still be there for BTC. Obviously, we're more interested in altcoins, but just seeing, maybe you could like, if you wanted to paint a 4-year cycle out of it because you wanted to see that in the charts so badly, I guess you could, but that it would be much harder to see, as time goes on.
Well, each year incrementally, or each cycle, I should say, you're always seeing less of a dip. First year, Bitcoin dropped, 90, 95% the first year.
Yep. Here.
What was it there?
Yeah, it was 95. I'm pretty sure.
Yeah. And then the next cycle, it was 90% and then 85%. So, you're dropping by about 5% better each cycle. So I'm sure that plays out in the rest of the altcoins. Wasn't it historically when Bitcoin topped, it was 28 days that Ethereum topped after that previously?
Yep. That's right.
Yeah.
Yep. So yes, and so also I think that there's going to be there's going to be a switch that's flipped at some point, that like mimetics is going to evolve into utility, because because the lines are going to blur. So meme coins, right? Like there's eventually meme coins are going to get utility, or they're going to fizzle out.
Yeah.
And the utility is going to become like really important, and like the line between them is going to blur. And look, I'm a guy that made a coin that did really well, and now it's getting utility built on top of it. People used to call it a meme coin. I would disagree, but like I just think boilerplate ERC20 token is that doesn't necessarily define it as a meme coin per se, but boilerplate ERC20s can get utility as well, and we're going to prove it. So yeah, I think there's going to be a shift here. I don't know if it takes 3, 5, 10 years, that everything's going to need more of a reason to exist, right, on the blockchain. Otherwise, it just gets diluted.
Yeah.
That's an opinion, by the way. That's not fact.
Well, sure. We are seeing that. I mean, we're definitely seeing it with memes again this cycle. Obviously, there's been memes in the past, but we're seeing it again this cycle right now more than ever. Two great segues to two different topics that we can go into. Because you were just looking at eHex, and Ewok had this question, Christopher just brought it up too. So if we could go to Hex on ETH, he says, curious to know what you think of the sell pressure of BankX for eHex, just kind of what the outlook is there. And Ewok, I know you had some thoughts on that too, so I thought it was a good opportunity to take a look at this.
I'm happy to hear your thoughts.
I saw, last several days they've been doing it in $500,000 or 500,000 hex clips. So I'm just curious as to where it's at. I haven't even looked at what.
That's 1,000 shots that they got. Then they could do that 1,000 times and they're out. So to me, BankX will probably be out of their eHex before eHex hits a penny,
which is good. I'd rather them out
definitely
now than.
Well, they just caused a lot of trauma for the community, and maybe that's unjustified in some ways, but it's real. And
sure,
because there's no good optics, there's no way out for the BankX guys, even if they were totally altruistic and always possible. The optics are so bad now, they can't hold on to that bag. And like even went insofar as like an OT, like they can't even OTC that bag because there's no way to verify if that's still BankX holding that bag or not. So it's like the only way for them out is through selling, either through V3 or through market sells.
Yeah.
Because for obvious reasons, right? And so do I think it's a big issue? I think it's a great opportunity to buy eHex if you like that trade, which is a totally different trade than the other 4 core coins from Richard. Like PHEX is obviously the Bitcoin, and eHex is obviously the Bitcoin Cash. Or better comparison would be ETH versus ETH Classic.
Yeah.
But remember that ETH Classic did do the same number of X's 2 cycles in a row as ETH did. So there's just more risk with the eHex one because of sentiment around it, not because of technical failure. Technically, they're the same, except one requires you to hold more units to hedge against the potential gas fee costs. That's it. Yep. So like if you're a big enough player, you're allowed to go play the eHex game. But if you're just a guy coming in off the street, you're probably better off playing the PHEX game because you'll be able to use it under any gas conditions. So they're just two different plays, but they both are connected at that origin point where that split occurred. Like if you're going to factor any of the past historical hex price action on PHEX, you have to consider that the token supply doubled. And I like that framing from Zenith on his stream with Crypto Coffee today, because that's how I've viewed it for a long time, is that it's basically was a stock split, right? And the supply holders has started to diverge out a little bit, but the majority still hold both. I think that's pretty verifiable. I'd love if Crispy could do an analysis on how many still hold both and it's staked or it's liquid. Now back to the whole thing of BankX. I'm trying to get to the liquidity page here. I'm just kind of slow, but I wonder. I don't even think it'll view it because it's the positions are too far up the price chart. But I'll see if I can show them up here. But yeah,
So I thought they had removed a lot of those
The
V3
sell walls, yeah.
position walls. Is that not the case?
They may have, yeah, they may have removed some of them or all of them. I'm not sure. I haven't been
And I think
keeping
they're
up with
out
the change.
of. I think they've sold at least like what 35% so far. I mean, they're a good portion out at this point, but still. have
Well,
a
this
ways
is
to go.
all bridged, right? This is all bridged over liquidity.
I think so.
I don't think they have a whole lot left on Ethereum chain.
I don't think so either. Let me see if I can get the address.
But generally, I mean, this idea overall, people have been lost access there. I'm sure he'll be back in a minute. But generally, I mean, this is something that people have been overblowing, I think, for a while. There he is. Just the entire BankX thing. Like, there's just been a lot of fear based on it that I think is, I don't want to say unfounded. I mean, I understand people being like, oh, there's these big bags they're going to sell or whatever. But I mean,
well, mentally, I mean, you're dealing with a lot of people that don't want to be exit liquidity. I mean, I think that's the mentality of it. However, at this price level, I think people should be embracing the chance to get it this low, and it's mostly because of them, suppressing it this long. So, you got to look at it both ways, I think.
Yeah, and it's not just BankX. It's easy to make them the scapegoat.
Sure.
Not defending them either. I'm just, being realistic here. They've been selling off for months and months and months.
Are you ready for me to add your screen?
Yeah. This is the main wallet here. Let's see. They still have all of these positions in. So these are all V3 positions. Each one is a $70,000 position. So like this is kind of cool that it's all forecasted for you, that if you want your share of the BankX pie, like it's all out there right now. You could just go like if you were a Super Bowl on EHEX. Look, if the rest of the ecosystem does a 20x and EHEX stays here, somebody's going to rotate in and they're going to use some of their gains to buy all these positions up. I guarantee it. Just to buy them out. So yeah, what is this? A combined, so all of their positions is worth 1.1 million at this price. And then they have an additional 250K. So the bag is still pretty decent size, I would say, for our size of our ecosystem. It's it'll be about a $1.5 million bag here. Which could be worth maybe 3 million, 4 million by the time it's being chewed through. We'll see. They did just do like a promotional thing where, like, I don't know, they're trying to get rid of their EHEX. So I don't think it's as big of a threat as people think. The coins are for sale, guys. If the whole market can't come up with 1.1 million and whatever, it's going to be like 4 million by the time you chew through it. I don't see that. So, just through liquidity, just through the gains on Hex alone, if Hex does a 20 or 30x, it's going to start to chew through this wall with no bids on EHEX, which is crazy to think about.
Yeah. Yeah, and you've talked about the thin liquidity before. I mean, once we do punch through that, I mean, it'll be insane, the numbers that it could print.
I'm going to pull up some price charts on it here. Let's see. I don't spend too much time on it, but I do really enjoy my EHEX. I think it's a pretty cool opportunity.
Well, it's the least talked about of the 5 at this point. I mean, it's the redheaded stepchild. Many people were, campaigning against it for the longest time.
Still are.
That was entertaining. Yeah, they still are. I guess I just don't pay much attention anymore.
Look, it did 121% against Hex, and now it gave you a chance. Like, you could be ratio trading that. You could be trading this in this range. Against Hex, it's tougher to trade Hex against EHEX because PHEX is so much stronger. But EHEX against Pulse is a really fun trade. And look at how this one did not lose its values yet. It actually broke out and held, or at least it's trying to hold. So from the low to the high, it did you could have 4.2x to your Pulse bags from that wick low. So, crazy. But realistically, you could still be up 2.6x on your Pulse if you would have just rode that. See, I think this is going to be a trading instrument for a lot of us. Or you're going to rolling stakes, or you're going to trade it. It's just another opportunity out on the blockchain. I don't know why what makes this a worse trade than a meme coin, other than it's got a lot of history and there's bag holders. I mean, that could be one reason why you'd be against it. But eventually the bag holders run out of supply at these prices. That's the thing. It's too cheap. It's way too cheap.
Plus, it's still a core part of the ecosystem. Many people make the point about how it's the easiest inroads into the ecosystem. Like, people understand ETH, people are already on ETH. I mean, I still think those are all great arguments, and many people in, you know, mainstream crypto, for better or for worse, will look at that chart and still believe like, well, okay, this is Hex, and still not be totally aware of PulseChain and stuff like that. So as long as it's there, which it's not going to go away, I think people are going to have interest in it. We're going to see it shoot up for sure. So did you want to get to some more Pulse-centric stuff and just kind of see what you're seeing? I wanted you to take it wherever you want to take it, because I'm interested. Like, what do you think of the core tokens? What's the most bullish chart, or the one that you're most interested in right now? And then we can even do offshoots of that, like within the whole ecosystem, what you're just really, really looking at or finding bullish at the moment.
Well, there's new coins every day, it seems. The main chart that I've been in regards to Pulse, let's start at home base. In regards to Pulse, the main chart that I look at is wrapped ETH pricing for wrap Pulse. So in that case, this is on the ETH side. Pulse is up 53% in 141 days over ETH. That means that you could have, gotten 50% more ETH, just by holding Pulse during this period. You could have doubled your ETH bag from up here on this wick high. You could have doubled your ETH by buying and accumulating wrap Pulse down here. Now that's a pretty juicy thing. Like, if you put 1,000 ETH into wrap Pulse down here, you could have turned it into 2,000 ETH up here. So there's going to be whales that are going to jump on that opportunity as this market structure continues to build out and you get higher and higher prices here. One by one, a whale will step in to try to play that game to get more ETH through the price appreciation of Pulse. And this was just a normal 140 days of a flat bottom, broadening wedge pattern with a clear break of structure, retest, and then resumption off that level. And we just got rejected off the highest volume traded area, which was our previous kind of like, I don't know, you could say problem level from the past, where SEC crash wick low, support, breakdown. We've turned that into resistance, turned it into support, tried to turn it into support, turned it into kind of like an oscillation area here where it didn't know if it was support or resistance. And this is where Richard came in and made his statement. The price started to pump and SAC funds were being deployed. On the way back down, we tapped it, and finally broke through. And then that turned to resistance. And so then what we needed to do was build a new base. And that's what we did for this period of time here. I think there's about $9 million traded inside of here. And so there was a huge accumulation range. And look, there's no ETH here. There's 1.7 ETH in this pool. But you're telling me that a pool with only 1.7 ETH in it can do $9 million of trading volume over 141 days? Like, that's because somebody here is accumulating through limit orders, or there's a bot here, there's something here protecting this floor and making sure that that's in. So that's my case on Pulse is like, look, smart money wasn't letting this thing go lower. It was protecting the ecosystem for a long time.
Yeah, I think that was
acting as resistance, right? I mean,
that's right.
We need to bust through
level. Yeah, you got to bust through that and start getting a lot of volume up above that level to start to make this point of control.
And that's what those bars are on the left, right? That's the amount of volume and orders, the order books, basically.
This is where the most volume went through, is right here between 2352 and 2709.
Yep. And then after you break through the next one, then it really lessens. I mean, I'm sure
it could be like a consolidation structure like this, where you get like an ascending triangle, or you could get like I don't know. There's a couple different things that could happen here. You just don't want to break. Even breaking this isn't the end of the world, but you definitely don't want to make new lows. So that's all fair game.
What do you think the chances of that happening are? I mean, because it looks good. It seems like we're out of the woods there, even though we are seeing a pullback right now.
If ETH rips really, really hard vertically overnight in 2x's, like, you could see this could come back down here.
Right.
But then that would mean that the pulse price in dollars is going to rip because it's going
Right.
to track with ETH. So then this goes up. So there's nuance to the ETH pricing for sure.
Plus, long term, we want we want ETH to go up. So I mean, yeah, I mean, if that would come to revisit that, it isn't the end of the world.
Nope. EHEX back in the day got its butt whooped by ETH so many times in that cycle and still did the 10,000x.
Yep.
Mm-hmm. Yeah.
So then here in Pulse in dollar terms, it's just range bound. It kind of did a bull flag here, and it made some lower lows and started inside of this microstructure, but it didn't make like a major low. So here's your bull flag that you're printing, and made these lower lows and lower highs inside of here. And so what are we looking for? Well, in the microstructure, you're looking for that first higher low, which you got here. And then what you're looking for next is a break here to get a higher high from this lower high. So if you go from a lower low to a higher high, that's the hallmark of a reversal inside of this microstructure. Now, had this price came down here and closed below 43, we'd be in trouble because then that would imply that we're going back to revisit the lows, which we did not do yet. So price of Pulse looks strong, and that could be because of Hex. I don't know. Probably is because of Hex. Because everything has to route through Pulse to get the Hex. So it's Pulse looks very healthy to me, and I don't think it's going to take much to have this thing basically get right back to SAC. Like, it could happen in days. It doesn't have to happen. I mean, not days from now, but just the process of getting from the breakout of this high here to the SAC rate, that could just take mere days, a couple 3-day candles, maybe 9 days max.
Mm-hmm.
It's going to be, oh man, I'm getting excited, guys.
Dude, I'm so glad you said that, because I have been, every moment that I have access to fiat, I'm just dumping it in. You know what I mean? Like ASAP, as soon as I can. I'm not like trying to, I'm not, there's a lot of fine lines. Like, I'm not trying to, wait for a specific moment. I hear a lot of people like, well, maybe I will this week, maybe I will next week. And I'm like, maybe you get lucky and you get a better price or whatever, but I do not want to be playing that game of chicken right now. Like, you've seen how it can rip before. I mean, just look back into March of this year, and obviously we're looking for much bigger pumps than that. But I mean, when it turns, like you just said, it's just going to go, and it may not come back. So that's why I've just been trying to get in everything ASAP right now.
I think I laid a pretty good enough case here on the microstructure that this looks like it's going to at least try to get above this key level here of 52.42 or whatever, which was that's where we played with it here.
Right.
And you flip that as support, and then look, last time we just went straight up. So I don't know, how much, maybe you break up here, you consolidate a little bit, and then you just go. You do like 2 little consolidation periods, and then you just kind of go, and that's not even a 2x. That's a 68% move, and we've seen Hex, recently do this, which was destructive. It was a
4x, wasn't it?
Yeah.
It was a 3x over Pulse. So then against USD, it was like a freaking 4x, I think. It was a 5.3x.
There you go.
So imagine you get that on Pulse. I'm not saying that'll happen right away. That would probably happen later, but a 5.3x, I mean, that's
in that amount of time.
That's to the high. That's the all-time high from where we're at now.
Wow.
Boom.
And then once you get there, look out.
Well, yeah, once you break above this giant falling channel, then you can start to create corrective pressure up here and start to build out a base to target higher price levels later into next year. So like getting above these resistance line, it's diagonal here. And the longer this takes, the lower this trend line goes down. So it's pretty nice, because then, the longer it's taken, you can basically break up and then grind line that stuff. And there will be lots of buyers in here trying to buy. And so long as like the market makers play it right, you won't get the same type of flush as you did here this time. It'll be more like like Hex was in its early days, where it did like one of these and it came back to test the high, and then it retraced. And then it came up to test the high and it made new high, and then it fully retraced. At least you'll create long-term market structure up here to set up for the bigger move in the late stages of the bull. where you do something like this, and then you build out like that nice clean parabola for higher prices.
Looking
Looking
good.
forward to it.
Looking good to me.
Yeah, don't get shaken out here.
Right.
A lot of people will sell inside of here, and that's what creates this sideways action. Don't get shaken out here, guys.
It's going to be tough. Yeah. I mean, for a lot of people, this is going to be, you know, their first real look at like a crazy parabolic bull market, and surviving those dips along the way is going to be interesting. But I mean, that's why we're here. That's why a lot of these channels and these content creators are here to kind of, you know, be here with you guys through it, obviously. Axis, we always talk about PulseX whenever you're on, of course. And I'm just curious, again, your thoughts on it. I mean, we know obviously it's kicked ass basically since launch. And its ratio against Pulse has just been epic. I think right now we're sitting at about 1.75 or so when I looked earlier today. So it's been kind of hanging around that zone against Pulse for a while. And I'm curious, you know, you've talked many times about it reaching parity, which if you just said that a year ago, I'll fix the camera issue in a minute. If you just said that a year ago, I think people would have. I know people would have laughed at you, because after it launched, it was like 4-1. Everybody was shitting all over PulseX and everything. We've talked about that like story arc for it, where, you know, before the launch, it's like, oh man, 10,000x PulseX, and then it's like, oh, the, you know, 3 times the people had the PulseX tokens and they had the Pulse tokens, and then things launch and it looks like shit, and now it's just been incredible against Pulse all this time. So kind of what are you still seeing? Obviously the chart's insanely bullish, but I mean, what are you seeing in terms of it potentially reaching parity down the road? And another interesting question that I've been thinking about, and I know you have a lot of thoughts on the liquidity providing. You had that awesome kind of like little Maslow's hierarchy of needs type thing that you brought on last time, like the pyramid of different LPs, which was freaking great the last time you were on. But at what point, you know, I know there's so many variables. Ewok and I have tried to answer this, but at what point with PulseX doing so well against Pulse, does it become like maybe detrimental to be in that plain Jane PulseX field on PulseX, I guess. So, yeah.
Well, if you're not, well, in terms of I guess I can answer that question about the farm first. Like PulseX to me is, you mean basically if you're in there right now, you're expecting that you're going to lose half your PulseX on this next rip, or over the next year, whatever, however long this takes to hit parity. Is that a bad thing though? I don't know. Not necessarily, because it depends. If you're a profit maximalist, the farms have to be played more active. Have to actively manage those farms. But if you're just like a long-term investor, your ink yield should cover a lot of the impermanent loss, as long as you've been in them for a while and you're going to continue to stay in them. So so the farming thing is an interesting conversation piece on its own.
It's tough. Yeah.
In terms of just strictly price action, like, yeah, this was okay. So just to give context to what I said back here in August, I was like, okay, this is what we saw. We were like somewhere in here, and I was like, yeah, this thing's going to go back, because it got rejected off this kind of dashed line. It's been a rejection point in January and February. You couldn't hold it as support in March. What's saying that you're going to be able to hold it now in August? Well, it was like clear that it wouldn't. And it came back down, tested the bottom of the trend line, and then the buy and burn was there. And then, you know, some bid came in, but it was a rotation. It wasn't fresh money, I don't think. I think it was a rotation. And then you got back up here, you got rejected again. But now finally it hit my, we're on track for what I thought was going to occur here of this yellow spiky price action. Now we're going up for another test. And, you know, I don't know how long this takes or what this looks like, but I have basically by January next year, we should be at like 70% of a pulse, basically based on this past bars pattern. So I know it's not really, you know, concrete or that helpful, but I mean, if you just draw this out forward, maybe I could extend these lines. Let's see, extend the lines. You could hit it October of next year. You could hit parity. And then like on the slower timeline, it would be May of 2026. So that's your current trend. Here's a question. Why would this all of a sudden get nuked straight down and lose this trend with the buy and burn there, deleting literal trillions of them already?
Mm-hmm.
It seems like, you know,
well, this is the PulseX Pulse pair, right? Is what we're looking at.
Yes.
I mean, the price appreciation in Pulse could take off too. I mean, I realize it's going to pull everything else with it. My thought in the farm like that was, if we do go cyclical 4-year cycle, just like say we stay on that rather than the continuation that you spoke of earlier, it would eventually even back out, right? I mean, you're going to get parity, but will it hold parity? Do you think it keeps parity? Or do you think it does cycle back to that ratio where it's 1-to-3, maybe at one point?
Well, remember that the buy and burn gets stronger as volume increases.
True.
So there's a good chance that the mania is so powerful that, this takes its time getting up here. And then all of a sudden, like, the volume is getting crazy and you actually go beyond parity, back the other way. Maybe it goes even 4-to-1 the other way. Like, I'm not saying that. I'm just,
yeah, I hear you. Insane
because what does max pain look like? Max pain looks like y'all were wrong and I was right. And
yeah.
And I'm not saying me. I'm saying that that's how the market treats each other. Is
right.
When shorts get underwater, when longs get underwater, the market punishes them to the maximum and forces them to capitulate back the other way. Which is why so many people felt the need to ape Hex, and you saw so much ink exit and go to Hex. Which brings me to my next chart. So you apply this to your PulseX logic too. Notice how, like, all of this stuff comes back to trading logic, right? It's just simple once it's been said, but until then, sometimes it's not so simple. So this is what Ink's performance has looked like against Hex since the top. It's down 76% against Hex. During this period is when I saw the most Ink getting swapped for Hex. Not up here where people were super bullish Ink, down here where people have been super bullish Hex. But so where are we at now? Well, we're at that point where this could flip as support, as it had been support 2 times prior. So, to me, Ink seems super undervalued. So all right. So you guys are following, hopefully, my trading logic here.
Definitely.
Well, then let's go look at just strictly by market cap. Could look at by market cap. Like, look at, these are where we're at in terms of which coin is the most expensive. So, and this is not accounting for OA position. I always ignore the OA. I trust that actor. So Hex is in the lead. It's almost double the market cap of Pulse right now. And this used to be like 300 million, used to be less than half. So that's where that 5x move comes in, right? Well, here's PulseX. It's the 3rd cheapest token. So this is why I think PulseX is nice and steady, is because it's never been the cheapest and it's never been the most expensive. It finds its place somewhere in the middle until one point in the cycle where it doesn't, where it's just going to be able to take a huge run at it because there's such a shortage of supply and there's so much volume buying it up. We're talking mania, guys. We're talking end of the cycle.
Right.
Yeah.
It's interesting, but I still am. I'm fond of Hex. I think I have a soft spot for Hex overall. I still think Hex could be the big overperformer here, but Ink is currently the best buy just based on market cap. It's only $100 million market cap. Once you get rid of some of the concerns in terms of guys that are minting it and dumping it, if you can, like, you can't always get rid of all concerns, but once those guys that are negative externalities on price are consumed by the amount of demand, this thing's going to rocket ship and it's going to try to catch up to the other 3. And so that's why I think, Ink is the best buy. I mean, you look at it against any of these other coins and it's down the hardest. It's really clear on the Ink to PulseX chart.
You're answering Arrow Point's question that he just asked a moment ago, so this is good. Yeah, I would like to see that chart.
This is what Ink. This is what Ink has done against PulseX since March 28th, down 50%. This data has been coming in for 6 months, guys, and we've been covering it on my private group. Like, it's out there. I come on your guys' streams and try to give you guys a fair chance too.
Yep.
It's all out there, guys. You can, so here, that's why I'm giving you the trading logic and the charts to look at so you can make these decisions for yourself. The easy way to think about it is like, look, if you're DCAing in, always buy the cheapest one because they're all going to move. And eventually the one that was least in favor is going to become most in favor. So I think okay, here's my last sentence on this. I think it would benefit you not to be a profit maximalist. Like, don't try to always get the max gain because that's usually how you can get caught off sides, but just kind of hold a nice balanced position of these things and shift maybe percentage points of your bags between them when things are really, really out of favor. Move the thing that's super overbought. So like if anything right now, you take Hex and you swap it for Ink because that's counter trend. That's doing the opposite of the herd. And you're doing it like at support here. Right here at this potential support level that's coming in. So
yeah.
Anyways, hopefully that was helpful.
It is definitely helpful. And, you know, people need to realize in those short-term trades too, like, you know, remember like the tax that you're going to have on those moves and stuff like that, the capital gains and everything like that. And you don't have to do those things, but I think Axis brings up a really good point because most people get caught. I mean, the market went the other way. As soon as Hex pumped, you saw people dump Ink for it, dump Pulse for it, and everything. And people were chasing that pump from Hex when, you know, you would want to be doing the exact opposite of that and be fading some kind of huge move like that. So I think that's really interesting. And well, one final question I just had on the Ink is like, you know, we don't have to answer the LP question because that is really difficult. There's too many variables to it about the like PulseX pools and stuff and what you would do. But with Ink, you know, there's a narrative of like, is this just like the cake token and stuff like that? Will people dump it? Like, are people just going to dump it for memes and things like that? But as long as it's bonded to these other tokens, I mean, I think we are going to see it move like you've been talking about.
When it comes to Ink, you just have to think about it mechanically. Like, what is Ink? Ink is the manifestation of the risk that LP providers take when they go into the risk of impermanent loss that they take. So it's basically tokenizing the risk of impermanent loss. So the greater the risk, the greater the reward. So Ink price should rise congruently with the amount of risk being taken at the times when the market cycle is the most bullish, because people will be pulling from the farms to not be subject to impermanent loss.
Right.
So it's pretty simple if you really just break it down mechanically.
That does make sense. Yeah. Whereas right now people aren't going to be pulling as much. They're
Shout out to Crypto Sloth too, because he helped me helped tap into that whole concept of Ink being tokenized risk.
Yeah. Makes a lot of sense.
Never thought about it that way. That's cool though.
Did you have any I know I kind of have to get out here at 8:00 Eastern.
Same. I got a DGen roundtables waiting for us.
Okay. Did you have any last thing? What last thing did you want to round off on here? I'll let you just have the floor. Wherever.
Oh, hey, we could the Alive contract is coming. It's an upgrade for Axis. I wanted to point out that one of the things that I'm interested in right now is trying to find a way to make long-term Hex staking commitments more juicy, give you more of a reason to go long on your Hex stakes, to lock up more of that supply, to create more demand for T-shares long-term. Because if we can do that and we can give people a good enough reason to do that, it's going to make Hex more valuable in the short term. And it's not a hoodwink play. It's like, okay, well, there's a guy that made this thing called Communist that literally pays you to stake long. That's what it's designed to do. And this was like something that Johnny Sachs had kind of come up with, is that this idea of the coupon rate, which is a percentage of value that you get back when you make a long-term staking commitment in Hex. And so the chart that I have on my screen is the Communist price priced in Pulse. And what happened today was we broke out of, in a big way, of this ascending triangle pattern. Oh, it's not really an ascending triangle, guys. It's because it's not got enough taps to the upside and the downside, but it's just basically just a straight up and to the right. And you're breaking these horizontal levels all at one go. And what happened was a Hex shark came in and bought a quadrillion of these things. So there's only right now in the circulating supply 133 quads meaning quadrillion. Don't get too caught up in the units. Just think about what it costs. So right now a quad costs 36 grand, and that's I think it takes 2 quads to be a whale. So think of it like that. It's about 72 grand gets you a whale position right now in COM. If you go stake Hex right now for 15 years, I think you're getting back somewhere around a 6 or 7% coupon rate. Now, I would love if somebody could go and maybe confirm that. I don't know what the coupon rate is today because the price shot up 90%, so it's a little harder to. This candle was a 90% candle, 93% to be exact. So because there was only 6 quads on the market, and this guy bought one full quad all in one shot and broke the price out, and now it's now almost double the coupon rate that it was this morning. That means that somebody can come in, stake a lot of Hex for a long time, and claim back, like, I don't know, somewhere between 6 and 8% of their value back. It might even be more.
I think it's closer to 10 after that buy.
Okay. So look, if it was 5% and they doubled the price, then yeah, it would be 10%. So that means that if you staked $50,000 of Hex for 15 years, you could get back $5,000 right away in COM. And you can either hold the COM because you're a believer and putting your vote toward marketing dollars to get the next guy to do it after you to stake up more Hex, making this whole system more valuable, or you could go dump it for Hex and pump the Hex price with it. It's up to you really what you want to do with the COM. Look at the price performance on this thing from the beginning. Like it went up like crazy this was a 191x in the beginning of PulseChain to the peak. And this whole time we've just been consolidating, and this has been the education period for people to really kind of understand what COM is and how it's valuable and powerful. And we really need the community to adopt and understand the value prop of COM and its ability to onboard more dollars into the ecosystem for the long term, not short term. And so what we did was I was approached back in March. I've announced this publicly a couple places. There's an article on my X and called the Axis of Live Fusion, and then there's a video that we could play on the way out. And
yeah, we do.
And what we did was I was approached by the developer of Communis, and he said, I have an idea for a system, and I think the Axis token is the perfect input token to make this idea explode. And so what we ended up coming up with was a 2-token fusion that will be bonded to Communis to help. Look, Axis token on its own has done tremendously well. Like it's up, for example, it's up a number of X's that I can't even count from the beginning, but more logically from where the most amount of action came in, around $100 a token, it's up considerable. I think it's like 40x or so. It says 204x from, anyway, it's many X's. So the Axis token itself is both ultra scarce, and it has a very small number of whales that support and protect it, and they're very well funded. And you can see this activity on DBank, and this data will be transparent, and all of the top holders from Dolphin up will be all transparent on this new web layer application part of the Alive contract. And so in a way, we made the system similar to COM in that we think we've cracked the code, so to speak, on how to pay people to adopt something and get locked in for the long term. And we've seen how effective that was with Hex, getting people to stake for a long time and then becoming megaphones they basically become a marketing arm just because they have skin in the game. Well, we think we can onboard people into Axis Alive by the first ever free market floating rebate system, where the market ultimately decides what is the optimal price for Alive to convince the most amount of adoption. So it's a proof of concept for both the Hex COM, and it will be bonded to Hex and COM. So there's gonna be a direct link between, in a big way, by the way, not just like 25 grand, like more than 6 figures of value, and potentially more will bond these two systems together, so that in the event that this proof of concept is successful on the Axis Alive side, Hex will directly benefit by the COM coupon rate getting dragged up with the Axis Alive system. So I'm very excited about it, and there's a live demo to come publicly. I should have prepped a little more ahead of this stream, just to maybe have this be the debut stream, but maybe we'll do it in the coming week or two. I have no announcement on a release date, but the contract is audited by CertiK. It's live on
Mm.
testnet, and it's ready to go as it could be. I just want there to be the finishing touches put on the stats pages, and then there will be like a multi-stage rollout where like you guys get more and more data sets as the following weeks after it launches, including additional liquidity pools that'll be launched not just on PulseX but also on 9inch and Fux.io. So I mean, it's a very interesting system that can't wait to share more about, and it's going to help make long-term hex staking great again.
MAGA, or well, I didn't hear the whole acronym. I don't know what that would be, but something AGA. Dude, yeah, I mean that is awesome. I guess we can call this like your soft launch of the product anyway. But yeah, like the more things I think get rolled out, and we have a lot now, but like, you know, the more things get rolled out to help incentivize that long-term staking and stickiness and stuff like that, I think is terrific, you know. And like you said, I mean, the skin in the game, you know, Sami's been talking about, we didn't really get to this topic tonight, but that's okay. But like, just like the cults being a theme this cycle as well. And like, how many cults out there in crypto have these 15-year lockups and stuff like that, where people are running right now to do 15-year stakes, 10-year stakes, long-term stakes again, you know, especially now that the prices are recovering. But yeah, hey, kudos to you to help out that long-term mentality again, man. And yeah,
that reminds me that a maximum commitment in Alive is only 20 days, which is about 8 years. So the way that we thought, like, okay, well, we're launching in an election year, and you know that's got significance every 4 years, and we're also launching in a Bitcoin halving year, which has significance on a bigger macro scale. So let's make these 4-year cycles, right? You get 2 4-year cycles and a max length commitment, and then you can figure 2 max length Alive cycles equals 1 hex staking cycle, right? Because 8 and 8 is 16, so it's about 15 years. So
right, very cool,
awesome, man.
Do you want to hit them with your video of the protocol, and then I'll just follow it up with our outro? Then does that work for you?
Yeah, that's great. You want me to load it up, or you guys got it?
Go ahead.
We'll probably need you to load it up. Yeah, if you don't mind.
I don't have it handy.
As you do that, we just want to say appreciate all you guys in the chat. Another great stream with Access Alive. Things are getting super bullish. We had tons of you guys here tonight. Taylor DeCell, True Moxie, Mr. Chinks, of course. You're always here. DJ Moonboy, lots of others. Tons of people here tonight. We really appreciate all you guys. We do this every Wednesday night at 6:30 p.m. Eastern Standard Time. And continue to follow Access. You can follow him, obviously, it is just at Access Alive on Twitter, I believe. And I know you have access to your group and all that stuff and your website right on there too. But shout out to the Alive token, and we will, we'll check out his video on the subject here as well. But we appreciate you being on as always, brother.
Hey, thanks guys. Appreciate it. It's been fun.
Appreciate it.
Created as a unique education tool, Access helps students analyze blockchain data, study prices, and understand how money flows through markets. It was designed to empower and educate people within the PulseChain ecosystem. Members of Access Alive use the token to reward each other for providing valuable information, with incentives often distributed in small quantities to maintain a limited community supply. This approach has led to significant price appreciation and the formation of long-term sustainable price floors, as shown by the all-time price chart. In this video, I'll introduce you to the Alive rebate system, which is designed to reward participation in the Access Alive ecosystem. Inspired by and aimed at demonstrating the power of the Hex and Communist fusion, the Alive rebate system functions as an automatic participation reward machine. Alive increases the scarcity of Access and creates additional opportunities and utility for both market makers and participants. I'll explain everything you need to know about this protocol in a short and easy to understand video. However, please keep in mind that there's no financial advice on this channel. The Alive protocol operates on the PulseChain network and uses a unique lock and burn mechanism based on commitments. It features a 2-token system. The Access token, initially issued with a supply of 1 million tokens that can only decrease over time, and the Alive token, which starts at 0 and is created only when users commit Access tokens to the system. This mechanism makes Axis more scarce by reducing its availability on the market and encourages users to take advantage of arbitrage opportunities, which helps stabilize and potentially increase the prices of both the Axis and Alive tokens. In this way, the market dynamics of Axis and Alive are interlinked, with their combined value reflecting the overall health of the system. When using the protocol, users must sign a smart contract committing a specified number of Axis tokens for a period ranging from 1 to 2,920 days. Once the contract is sealed, half of the Axis is burned to the dead address and permanently removed from circulation. The remaining half is locked in the protocol for the entire duration of the contract, as determined by the user, and returned at the end of the term. In exchange for increasing the scarcity of Axis, users are rewarded with Alive tokens based on the number of Axis burned and the length of their commitment. Rewards are distributed in 2 stages based on the base payout. Initially, 20% of the total reward is given at the time of commitment, referred to as the start payout. The remaining 80% is paid at the end of the commitment period, known as the end payout. Over time, this ratio shifts. The more Axis tokens are burned within the protocol, the smaller the start payout becomes and the larger the end payout grows for all existing commitments. This means that early participants benefit from higher start payouts when more Axis is still available on the market, whereas as more Axis is burned, everyone with existing commitments in the system sees an increase in their end payouts. This incentivizes those already invested to attract new participants, as it rewards everyone with larger end payouts proportional to overall adoption. At the end of the commitment period, users can claim their Axis and Alive tokens at any time without facing penalties. However, if users break their commitment before it's complete, they will incur penalties. Specifically, if a commitment is broken before reaching 50% maturity, users forfeit both their locked Axis and the Alive end payout. This rule helps protect the system's value from potential hackers during the first half of the commitment. After surpassing the 50% mark, users forfeit only the Alive end payout, and their Axis is unlocked and returned early. Alive is the evolved form of Axis, achieved through a process that requires time and commitment. The protocol operates as a decentralized and unchangeable system, managed by users who interact with its contracts using their own private keys. It is designed to encourage community involvement, increase the scarcity of the Axis token, and drive continuous growth for the protocol. As a result, various strategies may emerge, such as setting up commitment ladders, trading between Axis and Alive, hoarding Alive to encourage further adoption through immediate benefits and profitability for new users, or simply accumulating more Axis as it becomes scarcer over time. Before engaging with this protocol, be sure to expand your knowledge by asking questions in the public Telegram room. Feel free to share your thoughts and any strategies you're considering in the comments below. If you found this video useful, please like and subscribe. Thanks for watching, and see you in the next one.